Hello everyone, it is Paul here, the CMO of Seasonal Tokens. Welcome on the next episode of the Seasonal Tokens podcast. And today we have another special guest. We have Brett from Capital Gains Tax. Welcome, Brett.
Thanks, Paul, for having me. Pleasure to be here.
Thank you very much for accepting my invitation. So there are a lot of interesting things that I have prepared to talk about. Some things that we haven't talked before on the podcast, and it is like how to treat your capital tax gains, so you're in the safe side. So I think that you're the perfect guy to help me and our listeners with that, right?
Looking forward to it. Absolutely.
Okay, Brett. So can you introduce yourself with a few words?
Sure. Yeah. I'm here in California, in the U.S. and I grew up in California in real estate and in investments with my family, and was able to go to a place called Marcus and Millichap and help people buy and sell investment real estate properties. And we learned about 1031 exchanges and ways to trade assets there. And then I learned about a strategy to defer capital gains tax on any assets, including cryptocurrency and businesses, not using a 1031 exchange. And it came because of the crash of '08. In the '08 crash, things really changed, and people who had not sold before that lost half or everything that they had owned. A lot of them did. Here, my clients, friends, and family. And so we wanted to figure out what went wrong. And at the time, I was just new in the business, just trying to make it in the business to sell real estate and for clients, but it was very, very difficult. And so I went through a financial struggle there, and so did my clients. And we learned that there's something called a deferred sales trust that allows you to defer capital gains tax on just about any type of asset, and gives you some transformation, the ability to defer tax, to get diversification and get liquidity in your investments. And that created an opportunity to help more people. And so we started to implement the strategy. And fast forward, I live with my wife and I and 5 kids, and we married over 13 years, and our oldest is now 12. And we stay busy with the kids, and stay busy with helping people with capital gains tax deferral and exiting assets.
Wow, 5 kids. That's amazing. Congratulations. I'm sure that United States is very proud of you.
Yeah, yeah, absolutely, she is. Yeah, I'm very proud of her too. So it's good.
And you are very young, so like congratulations. You're definitely a very great example of like what people should do. You mentioned a crush, so can you explain more about this crush? Because honestly I'm not familiar with this crush that you mentioned, and I'm pretty sure that most of our listeners are also not familiar with it.
Yeah, so this is the 2008 economic crash. Happened. They call it uh, uh, the great economic crash of 2008. So this is where the banks were seized up because they had too much what's called mortgage-backed securities that were underlining debt was on houses that people weren't paying mortgages on. They were just letting them go, and people were upside down, and values had gone so high, and debt was so freely given out that the banks had so much bad debt on their books, and people lost jobs and couldn't make the payments or stopped making the payments. And a lot of these loans were given to folks that weren't qualified and weren't verified on their income. They were called ninja loans: no income, no job, and they were getting loans, sometimes 100% financing on properties. And it became kind of like a musical chairs where people would buy and sell houses, or buy even more houses, and just bank on appreciation. And if finally the appreciation stopped, and the music stopped, and then all of a sudden the values were upside down, and banks had held this debt, and the government had to bail out the banks, and it became one of the biggest disasters in the history of economics, especially here in America.
Oh yeah. um, I heard a phrase that I haven't heard before about this crisis. Honestly, like I'm pretty familiar with it. Like I have experienced it in a very bad way. But I think that you mentioned a term that I wasn't familiar with that. But yeah, uh, this was a really bad time in the economic. But we are here to talk about more positive things, even though like in the struggle there are a lot of opportunities. Anyway, so what has actually attracted you to the crypto world?
Yeah, so for the crypto world, I just have found that people want freedom. Not only freedom with capital to move without huge intervention, but they also want the freedom to invest and be able to sell when it makes sense and buy when it makes sense. And so, part of capital gains tax solutions values is to give people what's called optimal timing investing, which allows them to dollar cost average, which allows them to sell high and not have to suffer immediate capital gains tax consequences. And so, for our US citizens to have capital gains tax on the sale of assets, we have that unique strategy to help them get what they want, which is some freedom and flexibility to invest. And I'll give you an example of that. We have a client, she bought $50,000 worth of Bitcoin and it went to 50 million. So she had about a $50 million gain. And here in the U.S., and she lived in California, it's about 37% of the gain is subject to capital gains tax. And so she had substantial tax if she were to exit, and she felt trapped to exit because she didn't want to pay the tax until she found us. And when she found us, we were able to structure an exit plan, which allowed her to defer the capital gains tax, but then allowed her to go ahead and invest it into a business startup, a tech startup. And that was her vision for her wealth, was to with her college roommate, instead of working for a big tech company, she wanted to start their own tech startup to educate people around the world, kind of like a Khan Academy. And so we were able to unlock that dream of hers, and have an extra $1.85 million to work with. About 37% of 5 million is what she exited from, and that was when Bitcoin was at 54,000 a coin. Now Bitcoin went up to about 68, 69,000 a coin, and unfortunately, she didn't exit the rest of the millions that she had. And now values are about, I think 19 or 20,000 for a Bitcoin. And so that's, and she understood that that was the risk of high and low. But the point is, she exited, at least 5 million out of that at 54,000 a coin, and she was able to get some diversification and start a new business venture, all tax deferred. And so, we believe that if you're in the crypto space, you're going to want strategies to exit well. Same reason why you're going to want to invest in certain coins that are going to give you, some flexibility and some freedom to buy and sell different goods, and or to invest in different projects in different ways. And we just work on the tax side, because that's a big portion of what happens when you trade and move wealth around. If that makes sense.
Yeah, absolutely. I totally agree with you that when you are in crypto, you are searching for the best ways to get the most out of your money, because in the end, this is an investment. So I'm sure that none of our listeners have a plan to give most of his gains to the government. So what you are offering as a service is something that I'm sure a lot of our listeners will need, especially if they are in United States. Because if I'm not wrong, you are offering this service only in United States, right?
Yeah, so Capital Gains Tax Solutions. My company is we work with a strategy that's only applies to U.S. capital gains tax. Now, you could be from a different country, but with crypto, typically wherever you're at is where you're going to be taxed. And so, if you live in a different country, this U.S. capital gains tax strategy wouldn't apply to you. Now, if you lived in the U.S. for a period of time and perhaps bought crypto in the U.S., then you check with your CPA. It could apply to you where you bought it. That's maybe kind of a gray area. But definitely, if you're a U.S. citizen and you live in the U.S., or anybody who lives in the U.S. that's subject to U.S. capital gains tax upon the exit of crypto or business or real estate, then this is absolutely true. And by the way, if it's real estate, then you're still subject to U.S. capital gains tax, even if you're not a U.S. citizen. So let's say you're a citizen of Great Britain, but you bought an apartment complex in New York. 30 years ago for 200,000, and it's worth 15 million now. And you go to sell, you're going to be subject to U.S. capital gains tax, and this is where we can help you out, as well as what's called a state tax. A state tax is a big challenge for a lot of non-U.S. citizens that own real estate or businesses in the U.S., because the exemption is only about $65,000 to $68,000, which means, let's say you had a $20 million real estate asset in New York, for example, or California, and you're a non-U.S. citizen. Upon your death, the U.S. government will take 40%, basically a tax on that 20 million minus the 68,000 exemption. And so you really want to know where you have a solution, and that's where you provide a solution to eliminate a state tax. And so the really question is, A, am I subject to U.S. capital gains tax? The answer is no, I'm not. Then you won't need us. But if the answer is yes, I am, estate tax or capital gains tax, then you want to check out what we do.
Great, great. So I hope that in the future you will be able to offer a similar service for other countries, even though like I know that in different countries there are different tax laws, which is not very good and makes your life complicated, especially if you're investing and having businesses in different countries. Now you can start.
Okay. Yeah. So, what are some of the common, I guess, taxes or common reasons people would use the deferred sales trust? I think was your answer for exiting out of crypto. So, besides deferring the capital gains tax, they might want to diversify the equity, and they also might want some hard assets, right? So, because crypto is a liquid asset, they're going to want to maybe put it into some real estate. And so, what's cool about what we provide is not only do we defer the tax, but once the tax is deferred, you can go back into real estate of your own or with partners. As long as it's an investment real estate project, or you can go into a business startup. You can go to the stock market if you want it to, stocks, bonds, mutual funds. The money can sit in the bank, and you can be patient and wait for deals to come up. And so it's the ability to dollar cost average, and the ability to wait for deals to make sense for you. So that's the that's the main advantage of the deferred sales trust. But we had a client who sold Ethereum, and he had rode the Ethereum wave for many years. He bought it for about 100,000 in the beginning, and it went up to 3 million, and it went back down. Then it went to 6 million, and it went back down to a million. Then it went to 13 million, and then back to six. And it was just really these high highs and low lows within relatively short periods of time. And basically, if we map that out, and it's I would say semi predictable at this point that the crypto is going to have high highs and some crashes, high highs and some crashes, right? That if we could sell high or even dollar cost average out high and defer the tax and get into a place where you can redeploy the capital low, that is the value of the deferred sales trust. You can practice optimal timing investing. You can practice dollar cost averaging without having to suffer the time consequence of not doing that, or the tax consequences right away. You delay the tax through the deferred sales trust, and we set all that up and help you do that.
Really nice, really nice. So I'm not pretty familiar how the tax law is in United States, but do you have to pay taxes if you are just holding, or for example, also staking?
Mm. Yeah, no, not if you don't sell, right? So if you're hold, it's not selling, or if you're staking, you're not selling. So you do have that. You don't recognize the gain until you exit, right? And now obviously the downsides of staking in places like Celsius, or places that went under because they couldn't deliver, and all the reasons why there was a big cash call. This is why we believe the deferred sales trust is great, because you literally exit out of the crypto ecosystem when you feel it's unsafe, or when you feel that it's over leveraged, or feel that the market's high, and you buy back in when the market's low. But you do it without having to pay the capital gains tax. You get to defer the capital gains tax. So in and out, by the way, both ways. So you can sell high, defer the capital gains tax, and you can buy back low, still deferring the capital gains tax, and kind of ride those waves up and down if you do it correctly the way we work it. So that, but yeah, you're right. If you just stake something and borrow against, or take a margin against it, and or don't sell, then you're not subject to capital gains tax. So in our scenario, the way we work it is we transfer the coin to the trust, and the owner of the coin now becomes an owner of a promissory note, and they are owed back the amount that went into the trust plus a rate of return over a period of time. So they're becoming the lender, right? They're becoming the lender, but it's with an outside trust, right? Our role is the trustee. We perform that service, and it's that part of it that allows you to keep the tax deferred. Does that make sense, Polar?
Yeah, absolutely. But if you can put it in even simpler terms, I think it would be very beneficial for our listeners.
Yeah, we can try that again. So I'll just do the actual deal we did. We did for 7.5 million for an Ethereum client.
Okay.
We opened up a Kraken account for the Deferred Sales Trust. It's a brand new entity that's set up, and he transferred the first 5 million within about 1 hour. He transferred the coin to the trust account, and the trust gave him a promissory note, which means basically an IOU. The trust says, "Oh, I owe you the 5 million plus typically about 8% on that." Now, the neat part is, remember, he transferred five. He also lives in California. He had about a $1.85 million tax bill that is now deferred. It's all deferred, and this 5 million is invested into stocks, bonds, mutual funds, real estate, whatever he'd like, back into crypto. And he's going to live off the interest of the 5 million and pay tax slowly. So the key was he didn't sell the Ethereum to the trust. Well, he did, but he did it he carried back 100% financing. He didn't sell it for any monetary payment. He received a promissory note, so he lent the 5 million to the trust, and he's going to receive it slowly over time. But he doesn't pay tax until he receives the payment. He went on to do another deal for 2.5 million, so now he has 7.5 million, and out of about 13.5 million that he had accumulated. So that's the short answer how it works. And someone might say, well, why isn't the trust paying tax? Well, the trust bought it for 5 million, and then ultimately exited for 5 million to the marketplace. So it receives 5 million in cash, and then we exit it to a U.S. bank, and then we start investing in different investments. So that's kind of that order, because it bought and sold for the same price. The trust did. There's no gain there, right? And since the ultimate seller hasn't received any of the 5 million yet, he's in a deferral state.
Okay, okay. Now it makes perfect sense. So thank you very much for this explanation. So I suppose that due to the fact that tax laws are not the easiest thing in the world, people are doing a lot of mistakes regarding to that. So are there like something like most common mistakes that people are doing with their crypto taxes?
I mean, I think just the biggest thing would be not tracking and not properly reporting. Would be probably the two biggest mistakes. Either they're not organized, or they're not as urgent with that. So I think you need to make sure that you're very clear on what you bought your positions for, your coins for, and that when you sell it, you're also very clear on reporting that on your tax returns. So those are the two biggest ones. I think everyone knows there's taxes, right, when they sell, and so I mean, of course, we think the biggest mistake, especially if it's over $1 million net proceeds, $1 million gain. Which, by the way, that's our minimum. You need to have at least $1 million net proceeds and $1 million gain for our strategy. That's our minimum. And so if you have that and you're selling without us, you'd have to ask yourself, why would you want to pay the tax? Unless you want to just spend it on a bunch of personal stuff, like a primary house or a bunch of just primary consumption. But if you want to do business or investments, then you might as well defer it with the trust, kind of like an IRA, kind of like a 401k, which are ways to grow wealth tax deferred. So yeah, so those would be the I guess the three main ones, if you will.
Great, great. And regarding to that, I suppose that people are definitely not familiar with what exactly you do and how exactly they can exit like a millionaire, like you have
hmm
mentioned.
hmm
But I suppose that this is leading to a lot of questions. So, what are the most common questions that you hear from your clients regarding to your service and capital gains taxes as a whole?
Yeah, one of the most common questions is, how do I know it's legal? Right? And the Deferred Sales Trust has thousands of transactions, billions under management, over a 25-year track record, and over about 20 no change IRS audits. Okay. And that gives people certainty and gives me certainty and confidence that this has been tried. This isn't something new. It's been tested by the IRS. It's passed. We've had national law firms review it. One of the biggest deals is over $125 million deal that was audited in California, no problem. And so the first one is it legal? How do I know this thing is legal? And can I trust that the people who set it up are going to stand behind it if I get audited? And the answer is yes as well. The tax attorneys we work with provide lifetime audit defense, and they're the ones that have defended the trust against the IRS for over 25 years. So that's the first one. The second one would be, how do I know the funds are protected, or who's this trustee? That's our company, and how do I know I can trust that they're not going to take the funds in inappropriate way, right, or invest them in an inappropriate way? Well, we have safeguards in place where you only the funds only get invested as you approve the investments. Now we have to approve them as well. It's like a check and balance there, and we also use third party financial advisors, third party banks, and you get 24/7 access to view the funds online. And we work we work closely with you to help you understand what it is, how it works, all the safeguards in place, and we also work with your CPA to help to report it properly. And then the trust files its own tax return, which you also get copies of. So everything is transparent, and everything is also confidential to the individual client. And we have those two things in place. I think the next one would be just understanding how flexible it can be. People get, they're like, wow, it can be so flexible and so neat that I can invest into real estate or businesses or back into crypto, the stock market. And and the biggest thing is, I think sometimes people just think it's too good to be true because they've never heard of it, or they've never done it, or they don't know someone who's done it. And so they're hesitant because they think, maybe something is off here, but it's not. It absolutely works, and we just have a very specialized skill set and knowledge. And our experience in the past is allowed us to create this and to execute this, right? So it's not just the idea; it's the team to execute the strategy. That I think people will learn as they spend time with us, of how specialized we are, and how we're able to execute on these plans.
Amazing, amazing. Yeah, definitely. When you mentioned this for the first time, like I was really thinking if this is possible, like how the wall is allowing you to do something like that. But I suppose that, like you just said, it's really important to have the right knowledge and right team to achieve that. It's not that easy, actually.
Yeah, and we can actually talk about that too. We think it's a win-win for everybody, including the IRS, including the government, including obviously the person who's selling the crypto or the business or the real estate, and us as a trustee. Because what it allows you to do, again, take the case of the 69,000 per Bitcoin. Had my client exited at that point, all of that capital gains tax would have been deferred. All of that wealth would have been maintained, right? And it would have been put into likely stocks, bonds, mutual funds, commercial real estate, business ventures, right? In other words, these are the things that actually, the government sees that spurs economic growth and jobs and creates jobs, and these jobs create revenue, right? Tax revenue, and as well as it allows us to pay taxes on our fees, right? And the capital to be deployed into the economy. It's a study of macroeconomics, which states that if we keep money flowing and moving and redeployed in different projects, like we have a housing crisis going on right now in America, and part of that, we need more apartment buildings to be built, and it's very expensive to do that. And now debt's going higher, interest rates are going higher, and so, how do you incentivize, private citizens who have a lot of wealth to create housing? Well, you give them tax incentives on the housing projects, and you also give them tax incentives to move capital from one place to another, like opportunity zones or 1031 exchanges, like a deferred sales trust. And so, we actually found that the biggest winner on this is the IRS, because it's allowing people to exit when it makes sense and to diversify, versus if you didn't know about this, right? And you had 70 million at Bitcoin was at 69,000 a coin, and now it drops to 15,000 to 20,000 a coin. All of that opportunity is all of that capital is gone. I mean, it's gone for now, right? And how long is it going to take for it to get back? And so I think the government also wants to incentivize the people to be able to exit well, and of course report it properly and pay your taxes as you should, and we do. And so that's kind of the answer, Paul, if that makes sense.
Yeah, it makes total sense, and it sounds like something that probably all of the governments should do. I'm not sure how popular is this in other countries and if it is even possible, but it definitely can help the economy in a good way and also help the government to get more from crypto without messing much with the crypto, which we all want, right?
Yes, exactly.
So it's a many wins, I would say, for all sides. So it's great that we have people like you that can do that. But at the same time, it's bad that we don't have such people everywhere. Maybe in the future, I don't know if you clone yourself or something like that. Uh, okay, great. So a lot of clients are coming to your site and asking a lot of questions, and they're preparing for using their services. I suppose they need to do something in order to work with you. But before that, I suppose that you also advise them to do something with their crypto investments. Am I right?
So we don't actually advise on crypto investments. We will help you structure an exit plan, right, from those crypto investments or businesses or real estate. I do invest a little bit into crypto myself, but I'm definitely not an expert there. I'm more of a commercial real estate expert. So it's more so on the we help them on the planning of the exit, right? But as far as the timing of when the market is high or low, that's up to them to decide. We just get everything in place, ready to go, and so that when they're ready to exit, they can exit.
Yeah, actually, this was my question. How do you help them to plan this exit, not when to exit the
Hmm.
market or in which coin to invest their money or
Okay.
when
Yeah.
to sell? So, yeah, so the first thing is that you're helping them to formulate their plan. So, what's the next step?
Yeah, that's a great point. And first of all, we work on a conditional basis, so we don't charge hourly. We don't charge anything unless the deal closes. And so it's 100% conditional. So if the market crashes, which it has in crypto, and we had a lot of clients who were prepared to use it but ended up not using it because the market went down. But should the market come back up, they're ready to exit. That is what we do. So we will set up a trust. Step one, you name a trust. You can name it the crypto DST 2022 trust. And then from something along those lines, it's a made up name. And then we open up typically a Kraken account because we've worked very well with them. And then the next step would be for you to transfer a small amount, just a test amount to make sure everything's connected there on the wallets, right? And then from there, we exit bigger amounts, right? And then it all goes into a U.S. bank account that we've already set up, and then from there you have a promissory note. And so that's kind of the short answer. But you're gonna fill out a risk tolerance questionnaire. You're gonna fill out what, where, and how, and look at allocations about where to invest the funds and the timing of all of that, and then we're gonna close. And what the neat part about crypto is you can push a button and instantaneously basically the funds will transfer over, and it might take a day or two with the wire to get from Kraken to the bank account, usually one day. But that's kind of the short answer. And then post close, you'll improve the investments, you'll have access to view everything online, and then you'll start receiving payments back from the trust, of which you'll pay tax on as you receive those payments. But it can just be interest only payments. It doesn't have to be the full principal amount. It could just be the interest that it's earning that you're paying tax on.
Really nice. It sounds very, very simple. So I suppose if any of our listeners has a lot of money in crypto, maybe they should consult with you if you can help them with their exit plan. So you mentioned that you are investing in crypto. So can you share more with us, like when you have started doing that, and what do you think about crypto investing in the current market situation?
Yeah, we started in 2017, just small amounts. My brother and I over Thanksgiving dinner. It and quickly made a little bit of money and then quickly lost a lot of it, right? But never really sold. Just really kind of kept it all in there, and then did some more investing, just the basic ones, Ethereum, Bitcoin, some Chainlink, Solana, a couple others. And Yeah, so we also do some mining. My kids and I we do some Ethereum mining, although it just switched over to the new Ethereum. So right now we're on pause about what to mine right now. So it's the education, it's the study of the application of the coins as much as we can, and it's also just being in the game so that we can serve our clients as well. We're mostly real estate investors has been our primary focus, but we think that the future is also cryptocurrency and also those two coming together. I just spoke at the blockchain real estate conference on this exact topic, and so you want to, we love the future of crypto, what it represents, and what it can do for individuals and clients and countries, if for that matter. And it's we're happy and excited to be a part of it.
Nice, nice. So from what I hear, you are definitely part of the Web3 world with full steam. So I suppose that you have started in 2017, and now you still support the same projects that you have been supporting from the beginning.
Pretty
Is this what
much,
you're
yeah.
saying?
Pretty much, yeah. About 10 different coins, and a lot of times I just take it from my clients who are very experts in this. But mainly it's Bitcoin and Ethereum for our biggest holdings, and then there might be something else that comes along that looks like it could be promising. We'll put a little bit into that. So that's that. Again, we're still very on our side. We're still pretty novice. We typically look for others that are experts in investing in different coins, and kind of follow their lead when it comes to picking different coins, if that makes sense.
Yeah, it totally makes sense. So from what I hear, like probably your most used strategy is dollar cost averaging. Is that what you're saying?
Yeah, I think that would be a good way to put it. Yeah, dollar cost averaging and being yeah, and also we invest heavily in real estate, right? So our majority of our holdings is in real estate, and we still have some in the stock market as well. And so it's not a one size fits all. You've got to really be diligent. Have a team is really what it comes down to. Have a team of experts in each particular niche of investing, and diversify. I believe in diversification, and uh, and then believe in opportunities to have optimal timing to be able to jump onto deals using dollar cost averaging, or just when deals make sense. And so that's uh that's a part of the study of investing, right? It's not just a one-time thing. It's you constantly studying dollar cost averaging, diversification, liquidity, real estate, crypto, businesses, and or having people who are in those areas to help you, tax deferral strategies, right? And you build a team around you is really what we encourage people to do, and then study with that team to help you make good decisions.
Nice, nice. Does this mean that if a great project with a great team, for example, appears, you would be ready to invest in it?
Yeah, absolutely.
So, in that case, my question for you is like, what would mean for you a great project to invest in regarding crypto?
I think with any project, whether it be real estate or crypto, it's the people, right? It's the people, and then it's also the plan, and it's also the opportunity. So you've gotta trust as much as you can, verify as much as you can. Who are the people behind it? What is the business plan? And that's also what's the plan to execute on this to do, and what's the actual product itself? Like what utility is it solving? If it has a utility, what problem is it solving? How would this make someone's life better, easier, faster on whatever they're doing? And how does that fit into the overall ecosystem of crypto in the future, right? And it could be a couple different things, but those would be the thing. It's not a one size fits all, but those are the three things that I'd be looking for.
Really nice, really nice. So there is one question that we ask all of our guests because it's part of our narrative, and it is like, how do you think a person can do more investing rather than gambling in crypto
How can they do more investing instead of, you said, the last part?
instead of gambling?
Oh, instead of gambling.
Yeah.
Okay, right. So, right, speculation, investing are two different words, right? So, and sometimes a lot of coins within crypto are either in between investing or speculation, or they're just pure speculation. So you just have to realize what you're doing, right? Am I speculating or am I investing? Right? Is this something where I'm completely way off into a situation where there doesn't seem to be any kind of utility, and I'm just riding a wave of excitement and riding a wave of speculation? And in that case, just know that you're doing that, right? And that's okay if you're doing that. You just know that you're doing that, and the likelihood of you losing that is probably pretty high. But there's also an opportunity to make excellent returns. And as long as you know what uh, world you're in there, right? Some people, I think, we get in trouble if we think we're investing in stuff that actually is more speculation. So I think just defining your terms there, and then of course having percentages allocated to certain parts. Speculation might be 1 to 3% of your portfolio, and then investing in crypto might be more stable coins, or things that are more tried and true, like a Bitcoin or Ethereum, where you're 10 to 20%, right? And then you might have the rest of your wealth 20 or 30% into real estate, and then there's a whole other way to think about this thing, just depending on your individual circumstance. Or you could break it all down to just crypto itself. You could say, I want majority of my holdings 80% in Ethereum and Bitcoin, and 20% maybe in more speculation or other opportunities. So it's defining your terms, and then I think setting percentages are very important.
Great advices. Yeah, I totally agree with all that you're saying. In most of the cases, we're a little bit confused in which world we are. Are we actually investing or are we actually gambling? In most of the cases, is gambling because the projects that promise the biggest gains are in most of the cases gambling projects, right? We don't know much about them. They're just starting out. They give a lot of promises like politicians, and in the end we find out that they're empty promises like in the in the real world, right?
Correct.
Yeah, so it has been a great talk, and I think our listeners have learned a lot about the opportunity that capital gains tax offers. So, are there things that you think we haven't mentioned but are important for people to know about capital gain taxes and your solutions?
Just plan and pre-plan. Just make sure that you're planning your exit before, your tax deferral exit strategy, before you're actually planning your exit of when to sell, right? So the key is, have a plan, have a trust in place, have it all prepared. Now's a good time to start planning, right? If you have $1 million net proceeds, $1 million gain, or you plan on you think you're going to have that in the future, to start planning to have everything in place, so that when the market does spike, you have a chance to exit, and exit well, and exit smart, right? Tax deferred. So that I would just say, just it's never too early to plan, and take action on listening to this podcast, and start to have a plan in place.
Amazing, yeah. If you fail to plan, then you plan to fail, right? So, thank you very much, Brett, for being part of our podcast. Can you share more like where people can find more about you?
Absolutely. So they go to capitalgainstaxsolutions.com. You can also search that on YouTube, Capital Gains Tax Solutions. You can also look for the new book that's coming out, Building a Tax Deferral Exit Strategy. And it's our proven playbook to unlocking your ideal wealth plan when selling assets of any kind for yourself or your client or your clients. It includes businesses, primary homes, real estate, of course, cryptocurrency. And it's kind of my story to how this all kind of came about, and hopefully give you some inspiration and some tactical knowledge about how to execute this for yourself, or for your clients. You can go to capitalgainstaxsolutions.com. That's going to be released here real soon. Those are the main places. Find me on Instagram, find me on LinkedIn, find me on Facebook. Brett Swarts. You can
Perfect.
just search that, Brett Swarts. Yeah.
Perfect. If you're fine, we're going to post these links on our show notes so it can be easier for people. So thank you very much again, Brad, for sharing your experience and knowledge with our audience. It was an amazing pleasure for me to have you here.
Thanks, Polar.
So thank you very much to all of our listeners. This was an amazing episode. Thanks to Brett. So look forward to the next episode. I'm Power, the CMO of Seasonal Tokens, and I'll talk to you on the next episode. Bye.